Hey guys, Gwen here with Intero Real Estate at Burlingame. The June market numbers are in for single family homes in Foster City, and we're continuing to see a shift in the market. The changes in the numbers are still subtle, which proves that our housing demand is still strong despite the higher interest rates that we're having here. Now stay tuned until the end to find out what the Federal Reserve did in June and how it affected our mortgage rates today. Now there are a total of 15 single-family homes that came on the market and a total of 13 homes that actually sold in June, which is actually up by 18% from 11 homes from the month before. Now median sales price showed a 3% decrease from $2.4 million in May down to $2,328,000 in June. Now median days on market dropped to 8 from 12 days. However, average days on market increased from 11 days up to 15 days in June. Now this is a sign that the homes are selling a little bit longer, but still considered a seller's market. On average, sellers in Foster City received 7% over their asking price. Now this is a dip from the month before where sellers were actually getting 118% of their asking price. Now this drop in price received over asking will probably more than likely continue as interest rates go up. The crazy overbids with 3 to 5 offers and hundreds and thousands of dollars over asking may be behind us. Now the median sales price in Foster City decreased from $2,330,000 to $2,350,000 from a year ago. That's just a slight $20,000 drop in median sales price. Average sales price per square foot went up 13.7% from $1,207 to $1,061 per square foot just from a year ago. And as of this morning, we have 20 active single-family homes on the market here in Foster City, and only 6 pending homes. So our inventory actually nearly doubled just from last week, and that's a great sign for our buyers. So if you are having thoughts about making a move in this changing seller's market, sooner is better than later. As for interest rates, we continue to see the buyers holding back and waiting on the sidelines due to the rate hike and the uncertainty. The recent Federal Reserve rate hike back in June 15th was actually the highest rate increase in 28 years. And surprisingly, it actually didn't raise the mortgage rates as what a lot of people had expected it. It actually dropped slightly since then. This was because the current mortgage rates had already priced in the anticipated Fed rate hikes. And as of this morning, jumbo rate is at 5%. That's a slight dip from last month, which was at around 5.25%. And lately, we've been hovering around 5.25% to 5.75%. So hopefully these rates will stay at or below this level. Our Bay Area real estate market continued to be resilient, but we are starting to see strong signs through our numbers that the market is shifting. In June, we had 4 cancellations and withdrawals and 1 expired listing, which is an increase compared to only 2 cancellations from the previous month. Months of inventory increased to 1.4 from 1. And now that's nearly a 50% increase from back in May. Now this opens a lot of opportunities to buyers that was not there from just a few months ago. Bay Area real estate market is closely tied to the stock market. So many of our young tech buyers have their down payment tied to their RSU. Let's just hope that the stock market can continue to be resilient. Again, with the jump in interest rate, that puts a strain on buyers that are already pushed to the limits. Higher interest rates mean a lower offer price. So don't miss out on the current opportunity that's in front of us. If you have any questions, make sure to comment below. I'd love to hear your thoughts on our current real estate market. Now, thank you for watching, and if you found this video helpful, give me a thumbs up and hit that subscribe button so you can catch my latest video. Check out these next videos if you're considering making a move.